Guten Tag, Guten Morgen. Um, Welcome to the weekly meeting, 413. Hold on, let me let the dog out. Okay, April 13th. And I want to go back and address some things. Uh, okay, I know everybody doesn't trade like me, but I'm still going to give it to you the way I see it. And this will make sense to many of you, and some of you it won't make sense yet, but just hang in there, and over time, this will make sense to you. At the end of every week, we look for weekly order blocks. At the end of every month, we can do the same thing with monthly order blocks. We can do the same thing with 2-week candles, 3-week candles, 2-month candles, and quarterly 3-month candles, right? So because it's 2 weeks into the month, I want to go back and revisit the quarterly candle. First, I want to look at the futures market, where we have the Australian dollar futures. There was a bullish order block, which ran into the moving averages, and now it looks like the price is still trading down. This is all versus the US dollar. British pound, same thing, bullish order block. It ran into the moving averages. It doesn't look like it's pushing up. It looks like it's pushing down against the dollar. Euro is pushing down against the dollar. JPY is pushing down against the dollar. And Swiss franc futures. Interesting. Bullish order block, tap in. First 2 weeks, it went down. So I would think that this would turn around and start pushing up. I don't know if it will, but that's what I would expect. Now, I know the dollar interest rates are better than the Swiss franc. So this is really something that we can come back and look at a later time. AUD CAD. Bullish order block, tap in. This looks like it's pushing bullish. It's interesting to me, if I look on this weekly chart, we got a bullish order block. So if this gives me another bullish order block, I will believe that this is bullish price action, and then we could trade it up. It's not going to be a smooth trade because you got this order block, then you got this garbage, this order block, and this order block. So it's going to be a bumpy ride, but this could possibly trade up over the next several weeks. The reason I would keep my eye out on it is because on the 3-month chart, we're on the wrong side of the moving average, right? And we've already rejected. And when you look at this weekly chart, you can see the rejection, right? Rejection, price closed below this wick. Why do you wick a wick? To grab liquidity. So I'm not convinced that this thing is going up yet. However, on the weekly chart, it's on the top side of the moving average. So it could come back down, tap into the moving average, tap into the zone, and then push up. Just something to look at for higher time frame reference or future reference. I don't like that. I'm not even going to look at it. Bullish order block. Some of y'all don't see this as a bullish order block. I do. So I would expect for price to push down. It did what I would like for it to do, which it started buying first. Now you can see that wick forming. So I'm curious to see on these lower time frames, are we getting bearish action? I don't have a weekly bearish order block. Maybe I have a 10-day bearish order block. I have a daily bearish order block, which I'm interested in because I believe that price should come down to this green zone. So now that I got a daily bearish order block, I can fib it, I can expect to push up into the daily bearish order block, and I can trade it back down. So I could mark this maybe as green on my chart because I'm interested in trading this down. You can color code it however you want to, but this is starting to follow my higher time frame analysis. Now I can take trades on the lower time frames that line up with my higher time frame analysis. I already have my zones, my 50, my golden zone, and my 78. I have them marked up. I don't have to argue with anybody on whether this is going to keep selling or not. It's immaterial. What I can see is I have a trade available to me that'll give me 134 pips to the golden zone. So I could take that trade, right? That's just to the 50. That's not, if it goes to the 61, then it's 184 pips. So this is following my analysis, which is cool. If you had traded it from way up top, you would have got more. But my point is, it's lining up with your quarterly analysis. Not interested. It's garbage. I'm not interested. Not interested. This is the same thing that we talked about, the USD trades. We're getting pullback. Maybe I can fib this 3-month candle and look for a pullback towards my zone. Not that you have to trade it, but you can mark it up. So if it gets to your zone and turns around, now you know where you can get in to enter a Bitcoin long if you expect the market to keep pushing up, which most of us do. If I'm interested in this, it's to trade this down. I had a bearish order block under the moving average. Some of y'all don't call that an order block. That's cool. I do, but it's a bearish order block. Price tapped into the bearish order block. It pushed up first. You see the rejection wick. Now I expect price to trade down. If you're a CAD chef trader, maybe you go down here and you look for trade opportunities. Let's go to the daily. Let's just keep it consistent. We had a daily bearish order block. It pushed down. It wicked this low. There's some garbage over here. It pulled back. I expect to see it pull back just like it did on that 4-hour. And I would expect to see this, even if it trades up into this imbalance, to keep pushing down. I already marked my zone up. You know, either it's following your analysis or my analysis, or it's not. If it's not following my analysis, I'm not interested, period. You can't do nothing for me, man. So same thing with this CAD trade. I'll just trash it. I could fib this candle on the 3-month. I like the fact that we've wicked the high. We went up and we wicked the high of that candle. That's a liquidity grab for me. So this is in line with trading a sell. If I want to trade this for a sell down, this all lines up. This is healthy for me. I look at the 4-hour. This is the zone that I'm trading it to. What's in that zone? There's a low right there. You can call it equal lows because it's 2 candles. However you want to look at it. Somebody in this chat told me that when candles don't have wicks, they're going to get taken advantage of. These don't have no wicks. So whoever believes that knows that that's the target, right? Then you got the 78. So you can at least trade it to these wicks. I don't have to argue with nobody on how far it's going. I can just take that trade and I'm good. So if I just take that trade, then let's just say this pulls back at the beginning of the week to this level. If I just take the trade to this equal lows, 282 pips available to me. I don't have to argue with nobody. I mean, I can take that trade and enjoy my 282 pips, whatever, right? On the smaller time frame, you do your own analysis. This is a quick overview, and we're revisiting the 3-month candle, the quarterly candle, because we can trade this down without question for as long as it takes for this to get there. If it takes a week, we trade it down for a week. If it takes 5 weeks, it's 5 weeks, whatever. We know where the trade is going, right? 3-month candle. This looks a lot different than other. I mean, there's a gravestone doji. So I would expect for price to sell, but maybe it goes up first before it sells. You'd have to drop down so you can actually see candles. So if you drop down to the 2-month, we can't really trade this 2-month setup because it has 16 days. But it looks like this is going to be a bearish order block, which would be cool, right? It would be cool because then you know what to do with the bearish order block. So maybe Chef J isn't a tradable pair based on this quarterly candle. That's fine. We already had others. So maybe you're not saving this. Maybe you're not putting a mark by FJ. That's cool. If you would mark this trade up at the beginning of the quarter, it's doing exactly what you would want to see it do, right? Now, did it go up first? No. So maybe you're not interested in trading it back down. Maybe you're just waiting for it to hit your zone and trading it up. Cool. You know, it followed your analysis or it doesn't, and you trade what you see, and that's it. This trade, we talked about the Dixie. We talked about the dollar. So we'll just keep going. EA is doing what we thought it was going to do. It's pushing down, right? We want to see it hit our zone, which it already hit and bounced one time. Maybe it's going to trade down into the 78. At that point, maybe it turns around and buys. If that's what you have on your analysis, that's cool. It's doing exactly what you thought it was going to do. So maybe you mark that up if you're trading EA. And you just take your time and go through the pair the same way you would go through your weekly pair. I'm going to take this off because that's a lower time frame. This is the quarterly analysis. I want to see price push down into the zone. I want to see it turn around and buy up at least to retest the moving average. We understand that Chef dropped their interest rates, which is why we end up with this bullish order block in the first place. I want to see price trade down into it and get out of Dodge. So maybe I mark this. Maybe that's still good for me to follow because it's following my analysis. Again, this is just a long-term way that I can trade this pair. I'm always going to drop down and analyze it on a weekly basis, on a daily basis, on a 4-hour basis, wherever my trading time frame is. But as long as my higher time frame bias is being respected, I have a lot more confidence to be a bully on the lower time frames. EG, I don't really need to look at this. I mean, y'all can look at it. Maybe it trades up and some of y'all are interested in it. I don't trade this garbage. This is one that I'm heavily interested in, EJ and GJ, because the pip counts are always outrageous, right? But this, along with many of the JPYs, is doing 100% what I expected for it to do, right? It pushed up first and, you know, it started turning and then, you know, it sprung a leak on Friday and it gave us, you know, our bearish order block on this weekly J, right? So where we can trade price back up and then we can trade it down, right? Into our golden zone, our 78. We don't have to argue on whether the price is going to continue to go down lower. I mean, that, you know, just trading it back to from this, where we expect to pull back this week, down to the golden zone is 373 pips. If it goes to the 61, it's 500 pips. If it goes to the 78, you already know the deal. It's tragic. So a lot of opportunity in those pair that are actually following your long-term play. Another long-term play, bullish order block, whether you think it's going to go higher or not, you can still trade it down to your zone or your 78 if it keeps going. And whether you expect it to turn and burn, you know, that's on you. If you think it's not going to turn and burn, you trade it down. We get another reading once it gets down here, whether it's going to keep going down or turn it and go up. But your long range analysis is playing out. So if you were expecting this thing to start selling, you would have been watching it and you could catch these 300 pips to the zone If it goes to the 61, 387. If it goes to the 78, 477. We talked about the USD pairs. All right, you got a GA, same deal. You can see the order block. I mean, I wish these candles were longer, but it's not. It is what it is. Now it's starting to push down. Trade is set up. Same thing with GN. You're marking these pair if they're following your analysis. All right. No trade here. There's no order block, so you don't need to even worry about that. You know, even though I believe it's going to sell, at least for a little bit, you don't have to worry about it. Order block, again, mark it up. Either it comes down to your zone or it doesn't. GJ, a lot of opportunity here. If you fib this candle, that's a lot of pips available. It just started turning. Look like it's 800 pips to the base of this order block. You know, and whether you fib the entire, this red candle or this candle, you know, it doesn't make me any difference. It's not going to affect my trade. So you do what you got to do. The bottom line is, once you fib and you get your zone, when you drop down to the 4 hour, you got to see if there's draws on liquidity inside your zone, like this low right here, like this equal low at your zone. You know, is there any imbalance, like this imbalance at your 78 or this imbalance? So there are many opportunities out there. The market might have been slow for some of you because it was consolidated, it was turning. Now you're starting to get the displacement, the impulse move away from the turning point. And as the market pushes away from there, it will give you opportunities to grow up and blow up, you know, in your accounts, because you're trading these moves. Whether you're trading it one way or you're trading it both ways, the important thing is you have to understand how to trade what you're trading, right? This is a fresh opportunity for people to post their work. Do your analysis. You can post it in the chat. You can post it free of charge. You know, we not even charge you to post it. If somebody says something negative about your analysis, it's okay. Let it roll off. See both sides of the trade. Maybe somebody else is trading taking the opposite part of your trade. All right. NZD CAD, bearish order block, trade up into your level, and then trade away from your level. If it's respecting the analysis, you can mark it up and keep watching. If it disrespects your analysis, let it go, man. Like fire that person. Treat them like a bad relationship. If it's something like this, you don't have to trade it. You don't have to look at it, and keep going. So there's no rhyme or reason why you would have to take certain trades, right? Bullish order block, price went bullish first. You're expecting it to trade down into this candle, or maybe you couldn't read the 3-month candle. Maybe you had to go to the 2-month candle and you fibbed this one and it went. So maybe you're confused about NJ and you don't want to trade it. Cool, trade GJ, right? Trade something different. However you want to do it is okay. However you decide to do it is the right way. But I challenge you guys to come up with a long-term plan and then trade that plan on the shorter time frame. The same way your trade setup shows up on the 4-hour chart, but you trade it on the 15-minute. You go down and you enter on the 15-minute. This is the exact same thing we're doing. We see what the quarter gave us. The quarter gave us this. Now, analyze what the quarter gave us, have a long-term, a quarterly plan, and then go down to your time frame, and you can trade your plan into the quarterly objective. It brings your trading together. You're not just trying to find, air quotes, a move, right? Because when you go looking for a move, a lot of times you're dazed and confused, right? If that move doesn't line up with the market, then the way I look at it is it's probably manipulation. And I don't trade manipulation. So if the pair is doing something crazy, I let it go ahead and be crazy. Be crazy without me. Because I like the pairs. There are plenty of pairs that aren't crazy and they aren't doing the wrong thing. So you mark up what the pair gives you and then you trade it accordingly, right? Or you don't trade it accordingly because it ain't giving you what you need it to give you. Bullish order block, zone, pair takes off going north. Okay, it's taken out without me. I haven't mentioned UJ this month. I love UJ, but I ain't buying it. Y'all holler at me when UJ turn around and start coming down. Then I'll be all over UJ. But for the time being, UJ is going north. And my analysis says it needs to go south. So, I'm not trading. Gold, man, we got a lot of people in here getting paid on gold. When I analyzed my 3-month candle, I said gold need to go to 2,100. Gold went to 2,400 without me. And now that's cool. I'm fine with that. And I know a lot of y'all got paid with gold, which is great. But do I want to risk my account buying the top? No, I'd rather not. I'd rather trade something that I know is following my analysis, right? So this is just a recap of how I trade, how I see the market, how I go to the higher time frames and get a bias, and then I trade that bias on the lower time frames. 3-month, I go to the 1 week to get my order blocks, and then I trade towards that 3-month objective. You don't have to do this. If you have something that works for you, that is successful, continue to do what you do. If your trading isn't successful, if it isn't working out, I invite you to do this very simple thing. It's so simple, it's done. And it's highly successful. And the reason it's highly successful is I'm not going to look for a move. I'm going to the market to trade my analysis, right? If the pair is moving back towards my objective, I'm in there. If it's not, you can have it. I'm not looking for a move. I'm looking for the move towards my objective. I'm not always, excuse me, I'm not always right. You're not going to always be right. And in my opinion, we don't need to be always right. Because, bro, I have Leandra, I have Kim, I have Kai, I have Terry, I have the rest of you, whoever post their analysis, I can look at that analysis. Whether it's the same as mine is immaterial. What it does do is it shed light on the other side of the trade. When we trade, we have buyers and sellers. You can't buy if you don't buy it from somebody who's selling it to you. It doesn't work. The market doesn't work without buyers and sellers. So if somebody is bullish and you're bearish, that's cool. That's cool. But you're going to see, you're biased to see it your way, and they're biased to see it that way, their way. The benefit of this group is you're giving me the privilege of seeing it from your bias. Now, if the trade goes bad for me, I can flip to your bias because you gave me the vision. You gave me your vision for your bias. Now I'm doubly smart and I can take advantage of the trade either way it goes. Many times I've gotten paid because Kim said, oh, it's going to go here. And I'm like, no, it ain't going to go there. And then it goes where she said it was going to go. Even though I was in drawdown first, now I can just get heavy, go in the opposite direction, and I can take it to where she said it was going. I get paid. I'm not here to be right, guys. That's not That's not the vision. That was never the vision. And if I'm 100% honest with you, and Alicia can can attest if she remembers, my analysis was never right. Alicia's was always right. She just never traded it. She would tell me where the trade was going, but she would never get in the trade. So I would make the money thanks to Alicia. And that's how we started a group. And that's the problem with trading is in most of our cities, we don't know anybody who trades. We can't go to the club and talk trading with people. We can't go to the golf range and talk about trading. We can't go play basketball. You know, if I like basketball in any city, I can go to a basketball court. You know, 10 other people show up, we playing. So this is our meet and greet for trading, right? And some people are going to be better than others. I don't care about who's better. You know, I could care less. I want Baba to make $1 million trading gold. I want OG to make $1 million trading gold. I'm not making $1 million trading gold. I'll catch a gold move every now and then. I don't trade it. I want GG to make $1 million trading gold. They always trade gold. I don't have to be better than any of them. I just need to be successful. I listen, if I get paid $1,200 a month, I'm ecstatic. I got a military retirement. I get a disability check. I'm gonna be fine. Trust me. $1,200 a month. Because I can go to Madoc, Mississippi and live with a cost of living is nothing. It's laughable, right? I can go down there with Terry to the boondocks of Louisiana. I don't have to be in New Orleans. I can be off in somewhere. I don't even know the name of them places. But I can go to the woods of Louisiana. Help me out, Terry, and I can get me a cheap spot with $1,200 a month. I know it's some cheap spots.
Oh, yeah, they got them. They got them, Ty.
Exactly. So all I'm saying, guys, is if we're competing with each other, we're missing the point. We're missing the point. The race should be together, right? It should be we're helping each other, right? I haven't seen Ant on here in a while back. Ant killing them indices, right? My man was trading, who was trading oil with me forever, was killing oil. All we need is to find a level of success, stick with how we found that success, and then grow that success, right? I say this all the time. I try to explain to you how I find success every week in the market. Some of you are going to understand exactly what I'm saying, and you're going to be able to see it, and you're going to be able to trade it, duplicate it, maybe not carbon copy, because you're going to have to make some tweaks. Maybe you're not trading London. Maybe you trade New York. You know, maybe you, hey, Ty, you trade up. I'm not buying it up. I'm just selling it down. Whatever. All of that is perfectly fine, but you're taking the things that I show you and you're creating your own system with it, and you're making it work. Some of y'all, when y'all hear me talk, you're just going to tune me out. Nope, you know, I don't understand that crap. I like the way Kim explains it, which is awesome too, because your language is the same language that Kim speaks. Some of y'all aren't going to learn from Kim. You know, that zone to zone stuff and trend lines bother me. And you'll trade quarters theory the way OG trades or whatever. It doesn't matter. All of that is great. The thing is, when I look to the right side of the Discord, and there's 800 members in here. I didn't even know it was 800 people. We got 800 people in the Discord. So as you gain an understanding, your voice is super important, because somebody, the reason why we have 800 people in here and we only see 20 people on the call or 30 people on the call is because we're not feeding those other people. They're not hearing it from me. They get tired of hearing my voice. They're not hearing it from Kim. They waiting on a Terry to get up and speak. They waiting on an Ebony, an Elfie. You know, they're waiting on a different person to spit the game to them in a different manner. So you're always invited to share your work, to share your chart, to share your analysis. And nobody in the group, not me, not OG, not Kim, not nobody should tear anybody down about their analysis. Don't do that. If you're tearing somebody down about their analysis, or if you don't agree, just say, hey, man, I see it a different way. Because at the end of the day, somebody is going to be right and somebody is going to be wrong. But one of those analyses is going to play out. And when you reverse, or when you rewind the scenario, had both people came to the table with their analysis and said, hey, man, we don't agree. When the trade played out, and they both would have had the answer to the trade, because between one of those two analyses, the trade is going to play out. So if my analysis is wrong and Isaiah's analysis is right, I'm getting in and doing what Isaiah has on his analysis. I can read a chart. So I'm going to take Isaiah's trade, and I'll take a small loss on my original position, but I'll win the trade because I was able to go his direction. And that's perfect. That happens to me all the time, guys. So as a group, man, I would like to see more sharing. All right. I would like to see more talk, but not tearing down, right? We don't have to tear each other down. I'm military. OG is military. Isaiah, I think, Isaiah, you're military, right? You used to be military. The point is, maybe we talk loud. Maybe we're more convincing. Oh, I believe this. It's all, for me, it's never, I'm never having ill intentions, right? If my analysis is not like yours is, trade your analysis. But you just understand that, hey, I have something different. And if your analysis break down, you can always pull up that chart. Let me see what Todd said. Okay, yeah, this is playing out. And who cares if you were right or wrong? I care. Did you get paid? Did you get paid? That's all that matters. Did you get paid? I feel like people have their analysis and they stick to it no matter what. They don't know when to let your trade go. When it breaks your swing high and you're short, hey, buddy, it's time to rethink. It's time to go an opposite direction. You know what I'm saying? Because your swing high was what was protecting your idea. So once it broke, your idea is wrong. Isn't it better to have somebody post the opposite idea that you have in the trade before it starts? That way you already know what time it is. Hey, man, I know that if the trade breaks this high, I need to go with the other person's idea. Something to think about. Something to think about.
Can I say something to that?
Sure.
I'm so glad you talk about this. Because this happened to me, obviously, this week. And this time I was able to pivot, as well as not beat myself up for actually sharing. I actually was like feeling like, oh, I haven't said so much in the recently, but now I felt like I wanted to share. And me sharing, particularly an analysis or a trade, a wrong one was a little iffy for me after the fact. But like I said, like you said, it really doesn't matter. We're learning. And at the end of the day, I actually did make money. So I was happy about that. So I could like soothe myself with that process that you just described. So
That's awesome, Elfie. But listen, I do think I'm learning, but I think I'm a pretty good trader. And I'm wrong plenty of times still. You know what I'm saying? Like, the bottom line is we mark up a chart on what we think is going to happen. And then the market happens. So it's no skin off my back if what I thought was going to happen doesn't happen.
right.
Right? The thing that I want is, I want to make money. I want to grow my account. I don't want to blow any accounts. So whether I'm personally right or your analysis is right, what I appreciate is that we all have analysis posted, right? Because if I have my analysis posted and Kim has her analysis posted and she's buying until you can't buy no more, and I'm saying it's going to sell, one of those analysis is not going to work out. And I don't care if Kim's analysis plays out. All I care about is, hey, man, it didn't follow what I thought it was going to do. Kim already has the answer posted. Now I can take it to her zone, right? That if we worried about being wrong, like this is not a test. This ain't high school or college where we getting a piece of paper saying we're great. The piece of paper that says you're great is your P&L. And if you're worried about posting something wrong, I think we have the wrong idea, about trading. Because if you're going to be right, trading is like baseball. And I know maybe y'all don't understand that analogy, but when you swing the bat at baseball and you hitting these balls, you're going to strike out. Every baseball player strikes out more than they actually hit the ball. Did you know that?
No, but it makes sense.
Well, just think about this. They get paid. It's some people that get paid $250 million, even more than that now. 300, $500 million for a baseball contract, and they strike out more than they hit the ball. It's the same with your trade ideas. You're going to be wrong more than you're going to be right. But that's where risk management comes in, because you can lose how many trades out of 10 and still be successful? 7. You can win 3 trades out of 10 and be successful. There's a reason that is like that, because you're going to lose. You're going to be wrong more than you're going to be right. But if we have this big community and we're all posting, somebody is posting the right answer every time. And you don't need to be right all the time. You just need to have the answer. You have a buy model and you have a sell model. I'm biased for the buy model to happen. When the sale starts happening, you're not distraught. You're like, okay, this is the model that such and such posted and it's playing out. I'm trading, I'm going the opposite direction with this trade. Just like you did, you're saying that happened to you this week, right?
Mm-hmm.
So it should be no skin off your back. And you don't have to even thank the other person for posting it. Hell, that's what we're here for. We're here to post our ideas, take trades, and win money. So that's what I envisioned. That was the whole point of creating a community, because it gives you the opportunity to learn in a group setting with hundreds of people, and we either are going to have buyers or sellers. Leisha might chart a little bit different than Rogia, but at the end of the day, that pair is going to buy or sell, and all we need to know is, where can I take this buy or where can I take this sell? And that's a wrap. So whenever I come on here and show you how I do it, based on the higher time frame analysis, most of us believe that the higher time frames are more accurate than the lower time frames. So generally speaking, the higher time frame is going to play out. So once it starts playing out, I can trade that direction to that objective, to the higher time frame objective. I've found that that's a successful way for me to trade, right? ICT talked about time and all that. All of it kind of lines up. So all I'm saying is, if you're struggling trading, the community has the answer. Whether you trade supply and demand, support and resistance, smart money concepts, all of it works. All of it works. I can show you videos of old rich white dudes in their 70s living in Malaysia on the beach with their wife. They don't trade smart money concepts, but they're rich as crap, because they trade M's and W's, and they're millionaires. They don't over leverage. They just allow time to do its thing. They can't talk to you about a quarters theory. They don't know what an order block is. They know what an M is and they know what a W is. And they trade those successfully. So if you're in Kim, if you're lined up with Kim and you understand the way Kim talks about zone to zone, I might shoot you a joke or two, but at the end of the day, Kim is getting paid. And if you're getting paid, then that's your tribe, and that's how you understand the market, and that's cool. Do that, get paid, get better. Show your work to help somebody else who doesn't get it yet.
Hey, Todd.
Yes,
Sorry
sir.
I was late. I kind of heard a little bit of it. I don't want to go on a tangent. Elfie is doing amazing things. Kim, amazing things. Everybody here who teaches, you know, your voices, like Elfie's not used to her being heard. People are wanting to hear Elfie now, and now she's stepping out. That's the next step. You got to get out there, right? We do the analysis, yeah, but now you've gained the confidence of the people. And that's an example that needs to be seen. People need to step up and do that. Now, I talk a lot of trash because we're military, that we do that. It's banter. It's not nothing to take offense to or anything like that. So people get caught in the crossfire. That's not my intention. My intention is boot camp style. That's just how I do it. And most people know, and Todd would know, that Marines are like that. But I don't mean any harm or anything like that. I talk about the thing. A lot of people have these things in them, so it affects them when I talk about those types of things. But that doesn't mean stop talking. You have to keep going, right? So there's never any ill will. I always bring that to the table because people try to label it as something that it's not. I could do it better, but I'm free now. I want you to see what freedom looks like. You get to do it the way you want to do it. There's no cancel culture in that. You can't cancel it. Especially when you're getting the bag, you can develop your whole program. And Todd is here, and he's the topology of it all. We're under the IC4X clearly blanket umbrella. We all fall under it. It's all family. We're supposed to be building exactly what Todd built. That's why he's showing it all to you. We all, as leaders, we all have this intention to build the umbrella. So just build it. We're doing it. People here are doing it, but we need you to step up and speak. We really need you to. We don't have to have you do it, but it's necessary because that's your steps. You can't skip steps. If you make $1 million, you're going to need to tell somebody how you did it. You're going to be so excited that you can't keep it in, but they're not going to know what you're talking about. Now you got to speak. You have to learn that part, and you learn it at home here. That's what we're doing.
That's it. And if you have something that works, it really is to your benefit to not go looking for a different style, right? Just work the style that you have, and make it work for you. If you don't have something that works, go to the person that speaks your language and learn that style of trading and stick with it. Right now, you know, it just is going to require some discipline, and maybe that's the problem. Maybe your discipline is the problem, you know, but work on that. That's why you post your ideas. That's why you post your trades. It's all for accountability. If you know you're supposed to be trading EJ, but you trading 17 other things, that's going to be a problem. And everybody's going to see that is a problem. Post it. Post it. Man up, woman up, post it. You know it was jacked up when you did it. So post it. Don't not post it and act like you don't know what happened. You know what I'm saying? That's all I'm saying. And the community will kind of tongue lash you into shape. Nobody wants to be embarrassed, or nobody wants to be belittled. So if you stop doing the things that you know are keeping you from being successful, then you don't have to worry about the ridicule or the side eye when you post your results. Right? All I'm trying to say is there's a clear path to finding success. It doesn't have to be OG level success. It doesn't have to be Kim level success. It can be beginner level success. You could take $100 account to $120. That's a 20% gain. If you do that on a funded account, man, you're eating, you're eating for the rest of your life. So just understand, if you're not posting, if you're not putting the effort for, you're not going to get anything in return. So I just want to take this time to encourage everybody to share your breakdown, share your post, share your idea. It's going to help 2 or 3 people who are watching but not saying anything. Okay, does everybody know what they're trading this week? Drop a 1 in the chat if you know what you're trading.
I was gonna say, Todd, just so it ain't no crickets, as you mentioned. I'm hanging with you, Chef. And I'm looking for it to go up. I just want to make sure you didn't have your crickets today.
I surely appreciate it.
And you already know what I'm doing. EJ and possibly SPX.
So it's a lot of 1s. Does anybody want to share their weekly analysis? It doesn't have to be the same way I do it. It don't have to be the way Kim does it. It could be the way you do it. Does anybody want to?
Mine is not marked up yet. I usually do my markups on Sunday up in the day.
But anybody can mark it up right now in front of us.
Okay, well, that'll work. Don't pop it up. Wait a minute, I'm on my tablet. Will that work?
Yeah, you can. I mean, Elfie, I think Elfie knows how to share a screen for a tablet.
That's the first step. That you got to want to do it. That's the first step. And then your voice is heard. Your voice will be heard from here on out.
Todd, you
They
can
wanna hear you.
Todd, you can share your
The annotated tool.
no. He can share his screen and then you can mark it up from his screen. So I pull it up and then
she'll have to request control.
and request control.
The only problem with this is, well, as long as you go back and mark it up on your own chart. But what pair are you trading?
But that's true.
You, Chef.
You did say you, Chef.
Yep, you, Chef.
So Sherry, is your thing an iPad or what is it?
Samsung.
Okay, then I don't know.
Oh, okay.
Sorry.
That's all right. I appreciate you trying to look out. Go to the daily. So on the daily, you got squinched up. So I'm not gonna be able to mark, am I?
You what?
Am I gonna be able to mark on it? Am I ready for that?
Did you request
You gotta request permission.
you got to request control.
Okay, so that's what this little sidebar with the pen and stuff. I think I got it. Okay.
No, not that one. Hold on. Let me see what hold on. No.
Okay.
It is under it is up. Okay. At the top of the screen where you see it says you're reviewing Tsumba's Tsumba's screen. Do you see that at the top? The green, the little recording.
I see where the recording button is.
Do you see something that say view options next to that?
Nope, I don't.
Sherry, you might be better off just trying to share your screen. Do you
Yeah.
see share
Yeah.
at the bottom of your screen? You could just do that instead.
Yeah.
Well, see, I'm on this on this darn tablet. I got this little annotated thing, but oh, did y'all see that? Did I
Oh.
draw on it?
Oh, I'm sorry.
Oh.
No, let me see.
But that's all I got. I mean, now I don't mind putting myself on the chopping block out here, but it
But
would be
listen,
nice if
I don't want you to
No,
look
I'm
at
talking
it.
about it'd be nice if I knew how to do it.
So just talk. Oh, yeah, I see it now. I see.
You see that, Blue?
Yeah, we see it.
Okay, well, okay, all right. So, wait a minute. Yeah, I need to delete that. Okay. So tighten it up for me so I can see what's over there to the left. So this is gonna be a quick, I know. So I think that I have. So that's gonna be a daily support. And this is my most recent low. I'm gonna try to put me a little block. Try to do a little Kim, but you know. Okay, and then I have an area right here that I would be paying close attention to. And then of course we have where the market is currently, and I don't want to draw right there because I don't want to mess it up. Now drop down to the 4 hour for me, please. I'm gonna see if it'll let me change. It might not let me change colors. Yeah, it will. Just to try to do it different. Okay, so I have where my daily is. So I'm looking at it. Tighten it up for me real quick, Todd, and then move it over to the right. So I'm looking at it and I know that, thank you. I appreciate that.
Let me, I just
Yeah,
want to,
because
I just want to
in my
read.
mind, I still know where my draws at. Yeah, so that's cool. Okay.
And the last one.
Yeah, and it'll go all the way over.
But I just right click. Now you can delete your markings.
Okay. All right.
Kim, how do I extend this to the right?
Don't forget your, it's
The settings.
No,
Dou-
just
double click on it, or settings, and then style,
Then go to style. All right.
and then extend to the left
Extend to the
or
left.
extend to the right.
Extend to the left. All right, let me see. Settings.
Mm-hmm. Cherry, don't forget your 4 hour zone too. Don't forget your
Okay.
your last 4 hour swing. That's all I'm saying. That's all I'm saying.
Yeah, that's why I wanted them to tighten it up for me. So here, now you got to you got, let me see. So in the 4 hour, it looks as if I go here, I'm going up, even though I've seen that on my higher time frame. So we're looking for the up move. But here is my last swing low. Actually, delete. That's not it. That's not it. Yeah, that's not it. Let me get that deleted. Okay, here. A lot I ain't even on the pen. Come on now, get it together. Right here. I'm trying to get up under it. It's my last swing low, and then of course, that's
Okay,
my swing high where we are currently.
Delete your mark.
Okay, you see where I was going at though, right? Okay. Yeah, that's my swing low. And then where we are currently,
Okay.
up there, catch the week, and that'll be my swing high. So I'm looking forward to go on up above and close above where that daily high is, because I think it's something else back there. I didn't mark on, it wasn't tight enough, but it's another level above this that's back to the left that
Okay,
I'm thinking that we're going to. But currently, as of just this markup, this is my most recent high right now, just me explaining it. So
Okay.
I'm looking for the market to pull back and take that, clear all of that. I think it's gonna come all the way back to, and I might be wrong, but I'm gonna attempt it
Pull back here.
to come on down. I think right there, and then I think we're gonna bounce up and go on and go from from there.
And then
That's
retest.
what
Okay.
I'm seeing, yes. And then retest and go on up to that next level that I didn't mark up for the daily.
Okay. So if this doesn't do this, then
Then I'll be looking forward to go on a little bit higher and touch that zone and then start going down. And then
okay.
once it break that 4-hour swing low right there, I'll be looking for it to break, but retest before taking it down to the next zone.
Okay, so go up here. Boom.
Yeah.
Boom, boom. Okay.
Yeah, that's what I would be looking for to happen. So I think that 4 hours is a key location, even though it's in between where the daily is. I think that swing low is a key location. Yeah. So it hit that and go up. That's my game plan. But if it don't and it break it, it's gonna retest and then go down to the next zone.
Come on, Cherry. Sorry, I'm just sorry.
All right, there you go, Todd.
Okay,
No
I
cricket.
appreciate it. That was easy to follow. So if you trade like that, I mean that's straight, it's to the point, it's simple. If you trade zones, support and resistance, that was a great example and a great explanation of what she's looking for. Anybody else? Anyone? Bueller?
Now that was an awesome start. Now, maybe once a week, somebody, just whoever's next, just get up there and, you know, we have to fill in the blanks on these videos because we're doing videos. We don't want it to be blank. We need people in there always ready to go, right? And then it'll fill in the video, and now we have a quality level video. Everything else Todd is doing is already done. The next pieces need to go in there. Help him out. It can't just be me and Kim and Nawaf, and we already do that. It's the new people. We need that. We need that. It's family. So I see the the analysis on gold. I mean, we know that the news is gonna get worse. We had a great beginning of the year, but we really got to see that it's gonna be paying the piper is what it's just beginning. So you just want to read that. If you can get that right, then your analysis will be correct on gold. Anytime a report comes out, gold pulls back. It's been telling us whenever the news ain't right, it's pulling back. That means it's going to tank. If it gets to 2,500, great. But if it don't, you know why it's not, because things are about to get bad and the market will reflect that. We've been talking about this. We know what's up fundamentally. We're fundamentally sound as a group. We know what it's doing. And then, okay, if it's falling, then just like Todd said about 2,100, yeah, 2,100, that's where it's going. So you just stair step it down and walk it down. You walk it up and you walk it right down.
Does anybody want to share their gold analysis?
I mean, I could throw the chart up, but yeah, it would be nice to see somebody else do it.
Why is gold gonna fall? I mean, what's the fundamental reason for gold to fall?
Well, from what I understand, they inaccurately priced in the rate cuts. And if they're not going to cut rates, they inaccurately priced it in, and now we see it. And then the rumors of the war, if you tie all that together, that would be a good reason why it would pull back so drastically. But if they're not going to raise the interest rates, that's going to be a depressionary thing to the market, in my vision. If we're not cutting, then it's like we're raising. Then you're going to get that effect. But if they do raise, then we get that effect. It's going to tank. But if we don't cut, it's like we're saying we're going to raise again. Because if we're not cutting, why are we not cutting?
Yeah, I can agree with that. I still believe we're cutting though.
Yeah, it would be great because we ride it to the freaking moon. That's what I
When
want
do
too.
y'all- when do you think we're cutting now?
It has to be
Well,
the end of the year because they already
Yeah.
saying we're not gonna cut.
Yeah,
Well-
the cut if will come later if we get it. But I do think we're gonna get the cut.
Yeah.
So this is this was my quarterly zone. And the market just shot up this month. This month it just took off. So for me, I wanted to see it pull back from this 3-month candle. It just never did. Now it's shot way up here. I'm not buying gold. And I got it. Like some of y'all buy gold. And I love to see it. Y'all do what you do. The market shot way up. It pulled down. It's a daily order block. I mean, to me, that daily order block, it went and tapped right in. So the next candle could be straight back up. I don't know. Like this is why I don't trade. It's kind of hard for me to analyze the pair because it's at the top. Now it's a bullish order block with the tap in. Maybe you can trade it back up to equal highs.
Hey, when did gold start going up? Was it in October with the rest of the market, or when did it start?
I think it was.
expanding?
Well, actually, it started in 19. But if you're looking at this year, yeah, October is when it started pushing. I always read and hear stuff about central banks buying gold, a lot of gold and all that stuff. But I still want to see the dang thing pull back.
What is that most recent? What go to that? I guess the 2013 time frame that swing high over there around, or maybe it's 2010
This one right here, or this one.
2013. Well, do the fib, put the fib on it, like downwards though. So that's, you know how to use that other fib, the extension
Well,
tool?
I don't like the way
Well-
you figured that. To me, that's backwards.
Well, I mean, I hear you, but those lines mean something. Is what I'm trying to see. Do you know how to use the other fib?
Which other fib? To me, this is the one that this is how we should be fibbing.
Yeah, this is fine too.
And it
So
pulled back
it just made it to the negative 27, so it's gonna retrace it. I think it's already retracing, or started it. So I
Yeah.
don't know, but so it's
with that extension field, don't you fib it from the bottom to your top and then back to the bottom to give you that
yeah,
fib?
yeah, exactly. That's how you do it, and it gives you, I think, higher
Yeah.
time. It gives
But
you
you don't
more.
need it because it
price
hasn't
start.
even
But I think-
gotten on this.
Right.
We don't get these experiences because we know how to use the fib for the part we know how to use it for, but it has these pieces in it too. I'm ready for this now because see, you saying it. Yeah, go ahead.
We don't need
You
this.
come all the way back to the original, Todd.
I
When
don't
you
think
hit the top, you come all the way back to the original for the last one. And that's
don't-
how you do it.
I don't think you're supposed to go to the original.
Yeah, you're supposed to do the point, for
Okay.
the extension, he's using from point A to point B to point C, which then gives you then it's,
Okay, I got you.
and it has tapped into the 78 of that move.
You don't probably need the extension
Because it haven't came off this chart yet.
right.
Yeah, so
So-
the initial fib that Todd did from the bottom to that peak high, it pulled back to the 50%, and on a higher time frame has tapped into the negative 27. Now 50%, 618 normally goes to, can go to the negative 618. So, I mean,
I'm
I
looking
don't
for
see where,
three
I
thousand.
don't see where price is breaking structure yet for a
Me
sell,
either. Well,
but,
not on this time frame, at least.
not on that time. Well,
Well, it's not, but you know, I just have a theory. It's my own fucking theory.
mhm.
You know, the indices just did this shit. You know, all these markets seem to follow each other.
Yeah.
The indices already hit the negative 27 and they're retracing. This one just hit the negative 27, and my guess is it's going to retrace.
Mhm.
Crypto is going to do the same thing, or at least Bitcoin is going to do the same thing if it already
Hey.
hasn't. I'm struggling through the previous all-time high, but it will go to the -7. You will get a reaction, it will retrace, and it will go higher. All of these things are. I just don't know. You know, when you bounce off this negative 27, you know, I haven't done the research to say where things typically go. I mean, do they go back to that, what y'all would call a fucking supply zone, you know, where, you know, that last consolidation point? I mean, I don't know, but you're getting a reaction off of that negative 27. So you probably are going to retrace.
Well, I would
Now,
look from this zone to here, and I would need to see a pullback to close this imbalance.
but it's the discount. It's going to drop to discount is what it's going to do. Wherever it drops, you're going to see it at a discounted rate. That's where it's going.
The discount from here to here would be right here.
What's the price though?
21, basically.
21 what? Yeah, 2150. Yeah, 2150. Right. That's
This is
the discount.
Discount is 2136.
Right.
According to this right now, yeah.
Yeah. 2115. Now, if I get 2130, okay, 2115. That is the discount of 2130. So now you can catch it at 2130, and you can also catch it at 23 or 2115 at the actual physical discounted number. That is it. We can catch that because it's going to react. It'll either be right or wrong, but you know it's in the area of 2136. There you go.
But see, this is the importance of looking up. Because the higher time frames, when you get into some of these price discovery type of areas, you know, you have to look up.
No. They don't know what price discovery is. Most people don't know what price discovery is.
Well, it don't make what I said not true.
I know, but you got to explain what price discovery is.
Explain it, man.
Price discovery is all-time levels. So you don't have anything to bounce price off of. You don't have anything on this side of the chart. So when you get to all-time levels, you have to go back to the basics of a trade. You know, you go up, you break a high, you want to see it pull back to discount, right? And if it's selling, you go down and you break a low, you want to see price pull back to premium before you take a sell. It's the same stuff. If this was your high, we broke through it. Now we want to see price pull back to discounted level. We already talked about the discount, the 50%, right? I like to see it go to the 62, but we might not get that. We saw this pull back 50 and it got out of Dodge. So it pulled back to discount, then it bought and broke all-time highs. So where did it break the all-time highs? Right here. So we can see it trade back to discount before price takes off. We don't think it's going to break down further than that because we're in a bull market.
Where's that bottom, the last bottom? What time frame was that for gold?
You mean here or here?
there. Where you at now?
October 2015.
Okay. Go to find like November 2022 timeframe.
July. So right here, basically.
Yeah, so gold is really doing its own thing. I mean, you're getting the same move, but the timing of everything is not close to the other markets, for whatever reason. But I see the same price action.
Yeah, they don't want you to catch it at the same time. They're not going to let you catch indices and gold on the sell at the same time. They're wavy. And yeah.
I hear you, OG, and you're right, but they are way off is kind of my point. Those
Yeah.
are within, I don't know, a month of each other, maybe 2 months, but gold is like years off,
But market makers are using lagging indicators and they're messing it up. They're pricing in the rate cut when we're not getting they priced in 3 rate cuts when they needed to just price in 1, and that was wrong. They priced in the wrong thing. That's part of why it's going up. As soon as we said we weren't raising interest rates, took off. That's when Japan raised the interest rates. We did not. We came out and physically said we weren't. And then Japan raised their interest rates. Then gold tanked, pulled back, and then took off. Because we said we weren't going to raise anymore. That was a decision.
Right. So I guess now they put the narrative out there, which is bullshit, that we might raise, which we're not raising, but that narrative is out. So gold is going to sell off and correct,
That's
based
right.
off of the narrative. And then later on, when we get the actual cut, or they start talking again of a cut, then it's gonna take back off.
Now think about it, between 2350 and 2400. If we already know that it's going to drop, you want to navigate your way into a sell position off this resistance level and take it all the way back down to 2136.
So basically the next cut is projected. The earliest would be July 31st. So this May meeting, there's a 94% expectation that we don't cut. June, there's a 71% chance that we don't cut. So there's over a 50% chance that the market is saying that we should cut in July. So this is pricing in a rate cut in July.
I don't think we get one.
I don't either. I don't either. Unless things get really out of control, there's no way. There's no way.
And they're going to print the money in June. So that's coming. That's bullish.
Well, they're printing money every month. What are you referring to specifically when you say
the money that goes to, they printed 1.7 trillion. This is when the market went bullish. This was what, 22, the end of 21 or the end of 22 is when they printed and gave the money to Ukraine. See, they're already talking about giving the money to Ukraine again. That's when they print the big package. That money goes straight to the market. So I don't know how, because this is abnormal. What we're seeing is abnormal. They're making inaccurate calls, but we haven't printed money in a year and a half. They're going to print it. This is the first time they're going to print. It's very important. And we don't have the budget. There's no budget, and they haven't printed money. So now everybody's waiting for this money. It's going to get printed in June or July. That's when they're supposed to print it. It's either going to be in December or it's going to be in June.
Well,
this current
stuff. I do agree. Money is going to get printed. I mean, I think they're already have been doing things that equal printing anyway. But you may be right, OG. I don't know.
Well, they printed 328 right? They printed 350 last year, and that was for the bank bailouts. This year they printed 328, and they didn't bail the banks out. The program was only for a year, and March 11th, I believe, was the last day for that, and they weren't able to borrow the money anymore. Last year they gave them the 350 billion. This year they kept the 328. They still printed it, but they didn't use it for what they used it for last year. So that means they kept it. But those numbers are out. It's 328 billion this year. That's all they printed.
So
Now this big
package,
yeah, the package is in June. Yeah.
but this says the budget runs out in September. The continuing resolution.
Yeah, it's always September, right? And they don't do nothing again and again and again. So now I see it. I didn't know nothing about this. Now I understand because I've seen it now. I'm like waiting for it. Like I already know what's going to happen. I feel like I know what's going to happen because they don't do their job.
No, they don't.
They just string us along.
Even if they had a budget, guys, I mean, they would still print money.
Well,
Well,
when they
obviously
pass the budget,
but
when they
that tells
pass
you
the
what they
budget,
printed.
it'll be a positive feeling for the country is that they passed the budget. And then they're going to do it when the market goes bullish and try to make it because they passed the budget. And that's not why it was. It's because it's time for the market to go bullish. That it's going to go bullish because it's supposed to. We're not worried about these Congress people. But they use it, they spend our money, the taxpayers' money, but they don't pass the budget. That's totally backwards.
Well, I mean, I hear you, but I think a lot of that shit it's always been window dressing, man. I mean, and I think people that worry about, oh, they printed money or they didn't pass the budget or
no, when they print money, the dollar drops. That's the importance of them printing money, is that it's going to make the dollar tank. It's a supply of dollars. If they don't print the money, we've been in a monetary contraction for however long, but we haven't printed since the last time we gave the money to Ukraine. That's the last time we printed. And that's why we're bullish right now. That's part of the reason. They only printed that much. We're about to find out how much they're about to print this time, because it's going to be way more than they printed last time, because they gave Ukraine 50 billion last time. This time they're going to give Ukraine 90 billion. It's almost double. So how much are they going to print? It sounds like it's going to be a lot, and it's going to go straight to the market, and that should make us go exactly where we're saying we're going. That's going to be a part of the catalyst. It's coming. So it's right around the corner. We're about to see.
OG, I think on a high level, I agree, but on a more nuanced, detailed level, you know, I would take some issue with some of the things that you're saying. But I think that the end game, the bottom line is money will be printed and the markets are going up. You know?
Well, you want to catch the market in a pullback. So you don't want them to print right now. You want them to print when they print. You don't want them to print right now because you want the dollar to go up. You want demand for the dollar to keep going up until they supply it. That means the market is going to fall to a low point. That's what we want. We want to buy the dip. So we look like we're getting ready to go into a dip. So we want the dollar to keep going up until they print, because when they print, it's going to tank, and then the market is going to bounce. That's coming. It's like right around the corner. We should be out of this level by the end of the year. Whatever this pullback is may be the last pullback of this cycle. We're going through it right now.
It is going to be the last pullback. You know, this will be your last chance to get in, you know, at a rate, you know.
Hey, Sean, where's Darwana?
I don't know, she just left the room. She's in here in the house somewhere. Why?
But to keep on track with this pullback is going to drop you to a discounted rate. So no matter what you're trading, if you know that the market is going to do this pullback, it's going to bounce off of a discounted number. So you just let it go down there, and then it's gonna be, when we talk about June, September, December, these are the months where you get these pivot points. So wherever it's at the time, you may be able to find yourself at the very bottom, catching a discounted rate. So you have to understand what your price levels are. So when this area presents itself, you can catch it with no fear, right? That's what we're here for, to make sure we have these conversations so everybody's in the know. When we're at the bottom, everybody should know that. So we got to keep having these conversations. It's not even a debate. We just are knowledgeable and we're having these conversations. It doesn't even have to be an agreement, but we do kind of know what's going on more than I think any other group I've ever seen. So we have to have these conversations.
Leandra, you got your hand raised?
Yes, I would just like to ask OG what was the resource you used to get the information that the US has given Ukraine 90 billion? Can you provide the link, please, for the resource?
Well, I just follow people who know.
Can you provide the link, please? Thank you.
Just go to the voice notes only chat thread, and then I post everything in there. I post everything that I pay attention to in there. I find somebody that talks about the housing market. I find somebody that talks about the Fed, and I just constantly pay attention to them. And I didn't even understand any of this stuff until I just listened more and more and more. And then over time, it starts to make sense. I didn't know when the CPI was. Now I know when the CPI on the money, 530. I didn't know none of this stuff. Now I'm just gathering it. So I try to post videos on a guy talking about Bitcoin, the best guy, so he talk about it, and then I put it in the chat. People don't pay attention. I post everything. So it's up to you on how far you want to go. You want to find the people that make sense to you, and then you develop a chain of videos that's all you watch. Right? I'm waiting for these people to say what they got to say because I know they know what they're talking about, and then I give it to you.
I think, I mean, I agree with OG. I'll start by saying that, but I think the point isn't that it's $90 billion. The point is that they're printing, so, and they're going to print because it's a presidential election year. There's multiple reasons that they're going to print. So, I mean, I think the overall point here is they're going to print money, and they did bail out a bank this year, another one, some bank in New York, that's a form of printing. If they come in later and they control the yield curve, as opposed to printing, that's the same effect, as printing. So the point is that they're going to print. That's the big picture idea here. I think it's pointless to argue about whether it's 90 billion or whatever, a different number. The big picture idea that everybody needs to understand is the markets go up because they print money. And they've been printing. If you go back to November, December of 2022, that was the fucking bottom of the market. They've been printing ever since then, and you take out that Fibonacci and you see you're hitting those higher level, we're starting to hit those higher level price targets. But every time you hit those price targets, you get a reaction off of them. And eventually we will break through the negative 27. And we'll probably come back to it and consolidate on top of it. And then we will go higher to whatever the next extension point is. So once you understand that on a higher time frame, which is why some of us keep saying, hey man, just put in a small lot size. You don't have to kill yourself with leverage. Just put it in and let it ride. Once you start consolidating on top of certain price levels, then you can do that. Or like OG was saying, we're bouncing off this negative 27. Once we hit a discounted area, you can be comfortable doing that and walk the fuck away. But anyway, that's all.
That's healthy. It's a healthy mind frame. Like you say, when you're fundamentally sound it's more than technical analysis. It's fundamental. And we have people here who are very knowledgeable in this stuff. And I just go find somebody who knows, because that's what we did in the Marine Corps. We couldn't say, I don't know. That's why I hate it.
That's how you learn. That's how you learn. You find somebody who knows. I mean, that's why you can speak English, because somebody knew how to speak it and they talked it to you. That's why you know how to walk. That's why you know how to run, So I don't look at any of this stuff as a race. It's a lifelong journey. That's how I look at it. And if you're just willing to learn, you learn at your pace. But once you learn stuff, it's hard to unsee things and unlearn it. But I think for the people, I'm not talking to people that are consistently profitable, but for people that are struggling, you have to look up. You have to look higher. And in my opinion, use that FIB tool, because it's like a roadmap. It gives you points along the journey that you should be hitting. When you go through certain levels and that candle's kind of solid, and it's like moving kind of fast. I mean, if you're a breakout trader, that's the time to get in that trade. And I'm not a breakout trader, but that's the time to do it, So anyway, that's all I got.
Announcement. I'm going to be giving away over 10,000.
Kim giving away over $10,000. Okay, Kim.
Yep.
So look,
She has the money. So
the US 30 blasted up, right? For the last 6 months. It's pulling back. We broke these highs, broke all-time highs. If we put the fib on it to find the discount level, the discount level is right at 36.3, right? 36.3.5. If you're a support and resistance trader, you broke through resistance, it's going to come back. Now this is the level of support. Same thing. If you're a smart money trader, you get the expansion, the displacement to the top, trade back to the imbalance. There's an imbalance start here, is here. Come back to the imbalance to take your trade to equal highs. It's all in there, no matter how you trade.
Hey, Watu, real quick, push your fib on the bottom, on the previous swing low, and fib to that swing high. No, the previous swing low. All the way down to that, that one. I'm coming.
And then go to the swing high, the other previous. This right here.
Yeah.
It didn't quite come back 50, but it pushed up and we're almost to the negative 27.
I think you need to go to the previous swing low. But anyway, I've done this on my own chart, but I gotta go. I mean, maybe next week I'll pull my chart out and
you're just talking about down here.
Yeah, right there.
Okay, yeah. So down here, price push all the way up here.
But I would take the top of it to not that swing high, but the next one, the lower one. No, down, right there.
For the pandemic push to the golden zone.
Yeah, and it's not quite right. You don't have it on the right points. I just need to look at mine, because that pandemic low should be was 78% pullback, and yours it's a 50%. So,
but that's if you're looking. I think that's a cheat way to look.
Well, I mean, it's the correct way to look, is what I would argue. But anyway, I'll have to pull up.
And then I would argue that if you put it back at the low, and I know you gotta go, Sean, and it pulled back to, it didn't pull back to it kind of tapped on the 50.
Mhm.
but more of the 23.6, 38.2. And I've said it time and time again, when it hits the 23 or the 38, it's going to the negative 61.8. So,
Yeah,
Right.
so, and I mean, looking at the 3 month, prices is still bullish, right? And it may pull back to Todd's red line and then continue to the negative 61
mhm.
and then possibly start to pull back for
And then, or it may just leave the stratosphere.
no.
Hey, I think the way I did it, was I found the previous bottom, like the 2018, 19 bottom, and that pandemic low was a 78% pullback. And, I just look at the extension points to where we are today. But I gotta go. Maybe I can jump back on my phone in the car. See y'all later.
For sure.
That was some awesome stuff, man. I ain't never heard that, but it's all
Thanks,
it's this is what we have here, man. Yeah.
This is why I don't like the way Sean did it. Because show me the other pullback. Show me the pullback that we pulled back.
Show you what pullback?
I thought you was gone, Sean.
Well, I was getting
When
ready
we ever
to.
pull back to the 50%.
So you have to, in this market, it is, to be honest, I really did this analysis on the Bitcoin chart. So the US 30, on the real markets, the pullbacks are not as aggressive, So I really did this analysis on the Bitcoin chart.
Right. Listen,
Like,
I agree with what you're saying, but I like to say until it pulls back 50, the market is going up. So the way I would do this is we didn't get a pullback until that pandemic pulled us back.
Well, you're right. And even if you look at the last bear market lows, you got an 80% pullback on crypto and you only got a 62% pullback in these traditional markets. So again, these markets, I didn't do the analysis on the US 30. It was on Bitcoin. And I just feel like that chart really showed, at least it showed me better big picture what was going on.
I agree. I think big picture is where we should really all be trading from, because that's going to line up your trades for the next X number of months, right? You can trade that direction for X number of months until it hits your price target. It really takes the guessing game out of what you should be looking for on a day-to-day basis.
Yeah, because it gives you the confidence that when a pullback comes, it's a shallow pullback, and you know where you're headed, as opposed to panicking out. That's why, like right now, when crypto is crashing a little bit, I'm comfortable sitting in my shit and dumping more money into it because I know big picture, where we're going.
And I like what you're saying, how you did it on the Bitcoin chart. He's not going to use the US 30. He's going to use the barometer. You're not going to use US 30 to tell me what the market is doing. I'm going to use Bitcoin for that. And then gold, oil, and then S&P 500.
Women have a shelf life. When they get to a certain
I got to run down.
Bye, Sean.
I would even argue to say that I would take NASDAQ over the US 30. It would be NASDAQ and S&P 500 are the barometers. Then Bitcoin is in that range now of those dogs.
This is what I'm gonna tell you. When prices get right here, your boy Todd, he buying. US 30 minutes. US 30 minutes.
What's the price?
36,986.
36,9, 37, 36,500. Okay.
Yeah, 30. I mean, listen, it should come down to 36,100. But I'm buying.
Yeah, okay.
If I gotta hedge it, I gotta hedge, which I shouldn't. I shouldn't have to hedge. I'm not buying
Just
with a
under-
huge position. Huh?
Right. You won't be over leveraged. Yeah.
No, I'm gonna be under leveraged because I'm gonna use
Under
the
leveraged.
mini. I'm gonna use the mini to do my buys, and I'm gonna
Yeah.
trade 10 cents a pip. That's gonna be my first position. But as it turns and burns, we get aggressive, really quick. And
Yeah.
my goal is to put 5 lots into the US 30 over a course of time and let it go up. Just think if we had got in this trade with small lot size and just got more aggressive as it went up, the same way we did oil. Bruh, like we would have hundreds of thousands of dollars just for 6 months.
We do.
Yeah, but I'm talking about just in equity in the US 30 trade because it went up for 6 straight months. Now, when this pulls back, this is going to go up until the bull run is over. You know what I'm saying?
Yeah.
So if you look over here, 2020, look at these candles, man. Like, bruh, this is ridiculous. I dare them to let me get 14,000 points off. I dare them. Yeah. Let me catch me a 14,000 point run.
You about to.
Bruh,
There's no way that you can't.
I'll be walking in the White House like, hey, what's up, Joe? Or Don.
I'm
What's up,
leaving.
DT?
I've never seen the White House and I never will. I'm leaving.
Well, hey, I'll be gone too, but that's just how much power a brother have because it's gonna be on and pop.
Yeah.
And I didn't do oil like I could have done it or probably should have done it, but you kind of walk into those trades.
You ain't missed nothing. We
No,
about to catch the buy on oil. We about to catch this dip on oil, and that war pop off. It's about to blow.
But exactly. But that's my whole point is you start where you are. If you got $100 in your account, you start there. A 0.01 on the mini is a penny per point. 100 points, you got $1. And you just walk into your trade. You keep adding to that position. It's a winner. It's a winner over the course. This was a winner for 6 straight months. Now you're pulling back. You could walk into those trades. If something is going one direction for 6 months, bruh, it's a wrap. It's a wrap. We don't have a choice but to get paid. So even if you're not where you think you should be as a trader, don't quit. Because once you see this, once you understand that I use this big picture chart to trade my smaller time frame in this direction to my objective, you are going to be a very rich individual. Because this is a cycle. They call it the market cycle, which means it's a wheel and it goes around and around and around. They're going to raise interest rates. They're going to drop them. The economy is going to do good for a little bit, and then it's going to do bad. You're going to be equipped to make money in a good economy and in a bad economy. And it's going to happen over and over and over. Just like winter comes and then there's summertime, that's the same way your trade setups are going to happen. Every year, the summertime happens. And even if it's not a hot girl summer, it could be a hot boy summer. But the fact is, it's a summertime. You're going to know how to trade summertime. And then you're going to roll around, autumn is going to hit. You're going to know how to trade autumn. Maybe you don't like autumn. Maybe you want to go on vacation. You don't want to trade consolidation. It might be autumn. Then the winter time is going to hit. That might be the bear market. You're going to know how to trade the bear market. So this is a formula that we're learning. We're learning a formula. Hey, man, every time the Fed say we're going to raise interest rates, the dollar gets strong as hell. So I need to be buying dollar, selling indices, selling gold, selling crypto. And now when they say they're going to lower interest rates, everything go parabolic to the upside, except for the dollar. So you'll know how to trade these cycles. And then here's the kicker, guys. When you learn what you should trade in the cycle and you look at it and it's not doing exactly what you think it should be doing, You go trade something else. Hey man, the US 30 should be going up, but it's not. Let me look at the S&P. Let me look at the NASDAQ. Oh, the NASDAQ is going up. That's what I'm getting at. We don't have to trade anything that's not going according to our plan. It's our plan. We don't have to trade it. If it doesn't go with your analysis, screw it. Go trade something different. There's plenty of other trades that are taking place, that are presenting themselves. All right.
I think we get into a paralysis on a chart, like, because you just really wanted to do what you want when you could have just left it alone and went somewhere else. We got to keep bringing that to the forefront, because this is what happens to people. They get stuck in it. You're either right or you're wrong. So if it's wrong, then it's not doing what you want. You got to call it. All right. Don't get stuck in it.
And if you get stuck and you don't see anything else to trade, just ask, man, what are y'all trading? What's actually moving? Maybe you like consolidation and you don't want to trade something that's trending. So you might ask somebody, what's not moving? What's trending? What's consolidating? Somebody else might know, hey man, this is consolidating. And maybe that's your hookup or your setup. I personally prefer a trending market. So I want to trade something that's trending. Does anybody else want to share analysis? Anybody have any questions over anything that we talked about?
I just want to say next week, the elite members will be co-chairing the meetings, the 5 o'clock meetings. Thank you.
What that mean, Kim?
That means you're gonna be doing an analysis next week. Dog on Thursday. We giving you on Thursday.
I already said I'm supposed to skip this Thursday. Because I
No.
did it already. That's all I'm saying.
On our call, we said everybody next week, everybody had to do I don't care if it's just for 10 minutes.
Hey,
An
Terry,
analysis
it sound like you got to do your analysis, Terry.
Uh-huh.
You know what? That's fine, because I'm gonna show my analysis and I will be deep in profit. There we go.
Deep in
He's
profit.
talking junk. He gonna do it. I don't know what he talking about.
Kai, that means you too, Kai.
Kai already knows. She got the
That's right.
The elite group. Terry.
Hey, Kai, why are you getting a pedicure? You're gonna be on the car. Toes getting sawed off and everything.
Wait.
Huh?
Kai, you breaking up. Kai.
Oh, damn.
It's all good.
Is my reception bad?
It should be
Went
there
out.
next week. We can hear you
Oh,
now.
no. I hear you now. Yeah. Post mine in the chat today.
Hey, Kai, no, we
No,
not
Kai,
talking about putting it in the chat. We talking about you doing the meeting.
Yeah,
Why-
you got. Yeah, you might have missed that part, Kai.
So listen.
Yeah.
Hey, Kai,
In the meeting.
you gotta tell that woman to turn that sander off while she's sanding your toes.
You stupid.
so you can take us to a meeting.
I'm with it. Y'all let me know what day.
Thursday. No, we already letting you know. Thursday.
He's saying Thursday.
Monday.
We
Monday.
Thursday. No,
Monday.
Elfie, they're gonna be
trying to
doing.
get out of it.
Elfie, they're gonna be
Elfie, come
doing Monday.